But firstly, a very warm welcome to you, Sanjiv. Thank you for being here, and thank you for accepting our most prestigious award at AIMA, which we believe is the most prestigious award in management as well, which is the AIMA GRD Tata Corporate Leadership Award. As you can see, the award is on the other side of the podium. It's quite heavy. I don't think you'll be able to pick it up. But the replica as well is quite heavy. But it does convey, the weight of it does convey the sincerity in which we awarded it to you. As you know, as a recipient of the JRD Tata Award this year, you would have to chair the jury for next year's award winner. And so that was this year's jury was chaired by TV Narendran, who got the award this previous year. Unfortunately, he couldn't be here himself. But personally, as well as from AIMA's behalf, we're deeply honored to present this award to you, and thank you for accepting it. It's really very appropriate that you get this award at a point in time that we're discussing transformation of the Indian economy, because you and your family have epitomized transformation in industry, transformation in politics, transformation of the country at the time of its independence, and now with your personal transformation of a small NBFC into the behemoth that it is now. A business that is nearing 1 lakh crore in disbursements, turnover, disbursements far exceeding those numbers, highly profitable, and touching every individual in India in some manner or the other. And I think it's very interesting for us to have you here today to tell us a little bit about your story, a little bit about where India stands today in its transformation, a little bit about where financial services plays a role in this space of transformation. And where do you see the opportunities for us, as well as for other managers who are around this table? So firstly, Sanjiv, if I may ask you, in the last decade, India has emerged as one of the largest economies in the world. How have financial services in India evolved over this period?
Thanks, Nikhil, and good afternoon, everyone. It's great to be here. Thank you, AIMA, once again for the award. I must say this is the third award I'm getting from AIMA. I know everybody can make a mistake once, but 3 times.
There may be a fourth at some point. You know, we've got to the JRD, now there's only lifetime. So we'll have to wait for that.
20 years at least. No, our own journey has been very much really a journey of financial services in India. When you think of banking before the digital era, so say before UPI, Aadhaar, let's say before 2008, when you think of banking, banking really had not changed in 150 years. You know, typically bank took money from those that had little extra money, gave it to those that needed it. You had to wait in line to get that loan, and the banks made a little bit of spread. Of course, there were computer systems and others that kept record. Of course, you had risks, and as all of you all just heard, Uday, probably the best banker in the country so far in his first innings. But banking had not changed dramatically. What changed has been the digital world. Because what the digital world has brought about is a significant set of discontinuities. Look at India. With the India digital stack, digital KYC became possible. We all got our Aadhaar, which is a digital ID. Digital bank accounts became a reality. Bank accounts went from something like 200, 300 million to over 1 billion bank accounts in a very short period of time, which essentially meant that digital pipelines were created between lenders, insurance companies, and the last Indian who could not access financial services earlier. What also changed along with it was the entire internet world. That started developing. Look at India with its mobile network, one of the top lowest cost mobile networks in the world. Today, our mobile phones, as Dr. Mashalkar will tell us, have more computing power than the fastest of supercomputers 25 years ago. So every Indian today can get financial services from a touch of a button on his mobile phone. So accessibility got created. You then had the birth of startups, and including in those fintech startups, the entire availability of venture capital and private equity in the last 25 years in India created access where otherwise, if you were an entrepreneur from an IIT, from an IIM, or somebody who just had a great idea and you could put a small team together, how did you get money for it? You went and stood outside a bank, waited 3 months, then the bank manager took a look and said, I don't understand this, go and set up a shop. I'll give you a loan for the shop. So the venture capital and the private equity world also came together. So if you actually think about it, so many things conspired together to dramatically change financial services in India. And in this area, India has led the world. Let there be no doubt about that, and continues to lead. But again, as Uday said earlier, we can never take this for granted. We have to stay at it to keep innovating. And that's where in the last now, since I would say 2008, we are dramatically seeing a change in financial services in India. Because if I'm a bank and I'm paying you 6-7% on your deposit, I can no longer take for granted that you're going to take a loan from me where I'm going to earn from you. Because you can take a loan from 10 other NBFCs, banks, fintechs. You don't have to come back to me. Earlier you had to, because only I knew about you. Look at the democratization of data, what that is doing in creating access. Some of you may be aware of a new protocol called account aggregator that the government has launched last year. As a consumer or a small business, if you're looking for a loan, all you have to do is on a touch of a button, one SMS and one OTP, you can give access to a potential lender, access to your bank account. You can digitally choose, because your bank accounts now under Aadhaar are all put together. That will come up on your screen of your phone. You can say this bank account information can be made available to this particular potential lender. And as a lender, I can use that data. I can see what your income is, where are you spending money, how many EMIs do you have, and on that basis decide not only whether you are eligible for a loan, but what is the right size of loan. Now, that data sat with different banks. Today, any NBFC, any fintech, and any other bank can access a customer which is not their own. So, to me, this democratization for the end consumer has been radical in the last 15 years.
No, before we get to the future, as you said, the democratization of data, the availability, and a lot of systems that have come together have enabled this transformation as we currently see it. But Bajaj Finance, Bajaj Finserv, sits in the middle. You talked about 2008, and I think that may be a turning point for Bajaj Finserv itself. And there have been different milestones that you've achieved along with what has been possible through the regulator, but also the operating environment. As you said, the account aggregator is possibly something that will drive growth in the future. But you've been very data-centric from the beginning. Can you tell us a little bit about how you approached that in an era when it wasn't really the norm? What drove you towards going down that route? And what has been the outcome? What we all know, but what has been the other outcomes that you would have tried to benchmark against, which are not publicly known?
2008 is when Bajaj Finserv was born through the demerger of financial services companies, our insurance and our NBFC from Bajaj Finance. And 2008 was an interesting period. It was the start of the global financial crisis. Banks all over the Western world were falling apart. The contagion effect of that on Indian banking was very visible. Banks had become risk averse, especially to consumers, small value loans. Regulatory supervision naturally had increased that much more. So the economy was going through the financial services world was going through a tough period. And yet, we had seen some of our best years as India. We were growing at 8.5%, 9.5%. Businesses were growing like never before. Our first set of infrastructure investments in India was happening. I know the first expressway, Mumbai-Pune, because I live in Pune, opened in 2003, 2004. Consumerism had started. businesses were moving away from mom and pop businesses and getting more institutionalized. If you wanted to go and buy a mobile phone or a television, you suddenly went to chains of stores, not to just the neighborhood store over there. In this environment, when we looked at the future at Bajaj Finserv, we realized that on one hand, there was a tremendous future ahead of us with India growing 8.5%, 9%. And even if you see the last 10, 15 years, on average, the 6 to 7% growth has dramatically increased the opportunity in India. But at the same time, we realized that we were minnows in a sector which was huge, very competitive, and very commoditized. So the question was, how will we make a difference? And we focused on 5 core tenets on which we said we will build our businesses. First was, let's focus on building long-term businesses where we can balance profit and growth. For any CEO or any management, there will be periods of time when you can accelerate a little higher and you have to sacrifice profit. And there'll be other times when you have to claw back to get those minimum margins and you have to slow growth down. This is part of probably a quarterly, if not an annual task. How well you do it, because this is not a science, it's an art. How well you do it differentiates those companies that last for the long term than not. So this was very important for us. Second, in a commoditized industry, and we talked about how the digital world was starting at that time. You could start shopping on Amazon in the US. Amazon India was not there yet, but you could. So you realize what the digital world was doing. So we said, can we focus on tech-led innovation all towards customer delight? And customer delight was very important because we were otherwise in a commoditized industry. I mean, I'd spent 10 years selling motorcycles before that. You know, you could excite a 22-year-old by kick-starting that motorcycle, and the roar of the engine would justify it to his father saying, yeah, iske liye 4,000 rupees aur is worth it, you know. I could never get my insurance policy or my loan document to roar like that. So consumers would go for the cheapest loan or the highest discount on insurance. So how do you focus on disruptive innovation, tech-led for customer delight? And if we have time, we'll talk about some of those examples. The third was accountable empowerment. And this was something which was a very unique part of our culture. Growing up in an environment, coming from a promoter group, I had the freedom within a broad set of guidelines that was set by my seniors or the board to go and build business as I wanted to. And it was our endeavor to say that in each of our businesses, if we can replicate that, if we can make every employee feel like an owner, we can give him the powers to work as an owner, we can reward them as an owner, but we also hold them accountable. This will create a flood of entrepreneurship, which will set us apart, because ideas don't belong to anyone. And believe me, we have the least amount of ideas. Ideas are there with your teams, but can you enable those ideas? So accountable empowerment. Next, fourth, was lean operations. Again, from my auto days, every rupee that you can save can go to the benefit of your customer, your employee, or your shareholder. So we were very clear, we must build the lowest cost business in each of our companies. And last was building responsible businesses, which is easy to say, but when you actually have to act and say no to a particular situation where you can get that additional business, but somebody needs to be paid under the table, you have to be able to step away, and you have to give that comfort to your team that at that time you must step away. So we focused on these 5 tenets. And with that, we built Bajaj Finance, which is today the largest NBFC in the country. Our 2 insurance companies, Bajaj Allianz, again amongst the largest. Our housing finance company, we started that 6 years ago. In the next 2 years, it should, after HDFC's merger, should probably be the largest private sector housing finance company. And 3 digital platforms. Because again, as Uday said, as we've disrupted our industry in the last decade and a half, we keep thinking who can disrupt us? And we think digital platforms can, because they have access to customers, they understand the digital world, they have a lot of data. And we have created 3 platforms. One is a financial products market aggregator, one is a health aggregator, and one is a digital securities aggregator. So we are looking at these business opportunities both as a manufacturer with traditional financial strengths, but also as somebody that understands the digital world and leverages that.
I want to come to the future as in a second in terms of how you're going to use data, how your business models will change, and how you'll utilize data to provide even more customer value. But you did touch upon customer delight as an inception point in terms of one of the fundamentals by which you built Bajaj Finserv. And could you elaborate a little bit more about how you were able to distinguish that customer delight and what were the points that actually drove him to become a regular customer with you?
So early 2008, our Vice Chairman Bajaj Finance, Nanu Pamnani, who sadly passed away a few years ago, also our mentor and really helped us build out our financial service business, used to drive every Tuesday morning, 5 o'clock from Mumbai. He used to be the first in office. The rest of us were driving 10, 15 minutes. But 8 o'clock, he used to be there in those days. 8:30, our meeting used to start. And Bajaj Finance was very small. One of our main lines, other than financing our own motorcycles, was consumer durable financing. And consumer durable financing had just started getting organized with some of the big stores coming around. So we used to do about 10,000 loans, consumer durable loans a month. At 10,000, we used to lose money. It was just the operational cost and the teams and people of technology who were managing that to lose money. So our finance guy said that, you have to do 20,000 loans a month to make money. To 18,000 was break even or something. And Devang Modi under Rajiv Jain, and Devang now runs a health business, was the head of that. And Nanu looked at Devang in the eye and said, Devang, I know you can do this. You have our full support. Tell us what you need. But I give you 1 year to do this because I have no time for hobbies. If you can't make this work, I will shut this business down. So, of course, a couple of days later, bunch of us went to the nearest consumer durable store. We said, let's observe what these customers are doing. And sure enough, by evening, middle class family comes on their two-wheeler, little Maruti car, husband, wife, 2 kids. Child is seeing this really nice 36-inch plasma TV in those days and wants the father to buy it. And the father doesn't have the money. There were hardly any credit cards those days. So father has to take a loan. So store guy says, okay, give me your name, your address, and I'll let you know in 3 to 5 days. Because the store guy then will tell some banker who's there, who has a counter. The banker will the next day will send somebody into that society. They'll talk to the neighbors. ये कितने साल से इधर है? अच्छा, सब कुछ ठीक है क्या? Behavior कैसा है? That's how you establish credit. And then after 3 days, you come to know, will you get the loan or not? We said, why can't we leveraging data? Because the credit bureau at that time, CIBIL, was already 5-6 years old. So in the big cities, you got pretty good access. So we started looking at the credit bureau. We said, is there a way for us to create an experience where when the child likes the TV, we can tell him, I'm sending it to you in the evening so you can watch cricket in the night. That is the experience. It took us 18 months to work on the technology, work on the processes, and to bring down the loan approval process, which was not only with us, which was with any bank or NBFC in the country. It used to take 3 to 5 days. We brought it down to 2 to 3 hours in 18 months' time. And with that, we crossed 25,000 loans for the month. And because of that, we are all sitting here and I'm getting this award.
And how many are you doing now?
So, of course, so I'll tell you one more story. Another example of innovation, but standing in the store. Within a year or two, many customers came back to us saying that, I want to buy now an air conditioner. I want to buy a washing machine. Each time, you guys are asking me for my information. But you know me. I've taken a loan from you. We said, good point. So we said, can we introduce a card, which was initially a physical card. It's a digital card now. So we call it the EMI card, the existing member identification card. It's nothing but a card which identifies the customer to us so that we know this is not a new customer. Now, how do you make the card work? So we went to the companies that run the swipe machines of Master and Visa card that are there in the stores, and we built our own software into that machine that recognizes our card. And then it hits our database, which tells us, yes, this is the customer right there in the store. This is the customer. These are the loans with him. These are the loans successfully closed or not. And on that basis, we could give an instant loan to the customer. So we went down from, it took us another 2 years to build the system out. But again, because the customer told us this was a need, we went down from the 2-hour loans to 30-second loans. We went from 25,000 a month to 100,000 a month. And today we do about 125,000 loans a day. And this is all because of customer-driven innovation.
Truly fantastic. But now comes to a question as to what about tomorrow? I do have a question about your insights on the economy, which I think I can come to a little bit later. But what about Bajaj Finserv tomorrow? How are you looking to gain even more penetration with the customer? How are you looking to be more relevant with the customer? You talked about the health aspect. What are you trying to do there exactly? And is that something that's announced? Is there something that's going to be rolled out soon?
So this is again another interesting area that we started working on about 4 years ago. We of course do health insurance through Bajaj Allianz. We also do loans to doctors, to hospitals through Bajaj Finance. And as we were sitting about 4 or 5 years ago, and again, as I said, Devang is the guy running it, we were saying that, are we looking at health the wrong way? What if we look at the health opportunity as a consumer? And if I'm somebody who is in my early 30s, married, probably 1 or 2 kids, I'm changing jobs maybe every 5-7 years, I'm probably moving cities as well. I lose my health record every time I move from one city to another. I lose the connect with my GP, with those few doctors that I knew. So I start everything afresh. Why can't we make life easier for the individual for their health needs? So long story short, what we have done is so we set up a new company called Bajaj Finserv Health. It's a subsidiary of Bajaj Finserv. You can all download the Bajaj Finserv Health app. We have aggregated now in about 200 cities, 130,000 doctor clinics, about 3,000 hospitals, all the main labs around the country, from Thyrocare to your Dr. Lal to, which is the Bombay one with M. Metropolis, all of them. We have added wellness. So we've added from gymnasiums to yoga. Mental health became very important during COVID. So there's a whole section on mental health. And we are creating products using insurance. We started with our own insurance company. We now have multiple insurance companies there. Because again, focus has to be on the customer. Your business will grow as long as you're competitive. So we've created health products. So we have a very interesting outpatient product, OPD product. Now, you never got OPD insurance because it's so easy in India, with no offense to doctors, to give a false prescription for a few thousand rupees and take insurance from your insurance company. But by creating this network of doctors, and now out of these 120, 30 odd thousand, about 25,000 of them, we've implemented our own software where all calls for appointments, prescriptions, reports, everything are digitally available on the system. It's all digitally available in a digital locker for the customer on his or her app. So when you go from city to city, you now carry all your health records with you. You even have access to the doctor. By aggregating these doctors, you can go on the app right now and say if you have a cold, you can see who's the doctor live in this zip code who's available for a conversation with you. And doctors don't like getting rated. But we are working on a system where consumers can say what their experience with the doctor was. So if you're somebody new, you can choose a doctor on that basis. Now, aggregating all this has been possible because of another initiative of the government, which is through the National Digital Health Mission and the digital health cards. I don't know how many are aware, but in India now, 350 million customers have got digital health IDs. And your digital records, like for example, many of you will have your Aadhaar and your driver's license and your policies on the government DigiLocker. You have now health records that are starting to be made available. So this is a whole new business that we've put in place where we've turned around the problem from the customer's side. and we've built a business solution around it. We are currently already on this platform of ours processing about 150,000 claims a month and processing about 300,000 appointments a month, out of which about 40% are end-to-end virtual, either teleconsultation or video consultation. And interestingly, the last 6 months, these 150,000 monthly claims are all being processed by Gen AI. So the Gen AI product picks up from either a printed or a handwritten prescription from the doctor, the main points, creates medical insights, creates what it thinks is the right claim value. Of course, we have a pair of eyes checking it to see that we reduce the error rate. So this is how you can leverage technology. You can change the value proposition of what otherwise was a traditional lens to look at a business, and all for the customer's good, to create a differentiated business proposition rather than be chasing the cheapest insurance policy or the lowest interest loan.
No, very meaningful. I think that it provides significant value to the customer. And if you look at the potential of this down the road in terms of how the data can be mined, and I believe that is the intent of the digital health mission as well, is to have better outcomes, better health outcomes. It provides enormous opportunities, and it's very comforting to know that we have such innovation that is happening. Even though, but it reminds me that I should get a digital health card myself.
So you already have it, because what the government smartly did is, if you sign into CoWIN for your COVID certificate, you have an ID.
Oh, okay. Well, there you go. But this throws up, this mining of data throws up different avenues of products and services which may not directly be aligned within the financial services. Is that something that you consider to be within the mandate that you currently have? Is there a team within Bajaj Finserv which evaluates these as potential opportunities? Like, for example, you said you created a platform as opposed to for insurance companies rather than for yourself. How do you see the role that Bajaj Finserv will play in this data-driven economy going forward?
Each of our businesses runs a reasonably exhaustive long-range strategy event every year. So mid-year, about 4 or 5 days is spent with the large companies and about 1 or 2 days with the smaller companies, where they have spent the previous 2 months, and the large companies would involve as many as 1,500, 2,000 of their employees. The smaller companies may have a couple of hundred of them, where one thing that they do is they benchmark the best company in the world for one area. So, for example, we benchmarked Starbucks, because for those of you or your kids, the rewards program at Starbucks is unique in how it attracts people to come and spend more money and spend $6 on a 50-cent cup of coffee, and the equivalent over here. We have a rewards platform that's gone live after 18 months of work, by and large taking best practices from there. We looked at Netflix 1 year to see the lessons from Netflix on how they, when you watch a few movies or serials on Netflix, the ease with which their engine tells you what next you should watch. So we've used that intelligence to say, once somebody has taken 1 or 2 loan products from us or an insurance product from us and has consented for us to offer additional products, how do you smartly offer those products? So one is benchmarking. We looked at HDFC Bank in 2009 or 10 as the best Indian bank at that time, to say, how do we benchmark them in everything they do? So when we benchmark, we don't just look at our sector. We look at the best that there is and see what can we pick up from there. Everything may not be relevant. Second is, we have a very bottom-up approach where every person in the company, whether you're senior or young and junior, has 2 tasks. You have to perform for today, for this month, for this quarter, but you also have a role to transform what you're doing for the future. And we would come up with a few hundred projects through which the top maybe 30, 40 of them we will evaluate in those 3-4 day sessions, and the rest get evaluated separately. And the best projects are the ones which go ahead, become a new business line, become a new tech implementation, become an HR initiative. And the project team very often is a youngster driving that with some of the older people mentoring that team. And those that then get the final green light, because some projects could be 3 months, some projects could be 12, 18 months. If they get a green light to go ahead, very often is this project team that says, can I go and build this out? See, that's where the entrepreneurism comes in. That's where the ownership comes in. They said, this was my idea. I worked at it. And now you're letting me build it out as a business. And we have multiple such examples. So this becomes the second way in which we open up to what we see is happening outside. And we are very clear that we pick up the best of ideas from everywhere. We generate a lot of ideas internally as well. But then we keep trying to see how do we keep improving them.
Oh, that's truly fascinating. Sanjiv, while you're here and you have such an insight into India, the Indian consumer, how the government is thinking, you do 1.5 lakh loans a day. Or was it a day or was it an hour? I don't know, but it's significant in whichever manner. How are you seeing the previous two sessions, which is the inaugural session with the minister and the previous one with Mr. Kotak? We talked a little bit about the fact that the next 25 years is for India, and very frankly, there's very little that can stop us. We have the wind in on our tails, and everything that we seem to have is working in our favor. Geopolitics, you have aspects from our transformation that's happening on the digital side, you have the transformation that are happening on the energy side, you have a demographic which is playing into it very equally. Where do you see the positives? And then like as you have a pseudo banker's hat as well, because you have to manage risk constantly. Where do you see the risks as well on both sides? The opportunities and risks. What is your outlook? What are you seeing?
So firstly, I'm not a banker. I don't run Bajaj Finance. Rajiv Jain is the banker who runs Bajaj Finance. I build businesses. And I'm not an economist either. See, we have some traditional strengths. The strength of a young, educated population, very entrepreneurial, and we have seen, we've talked about alternate source of capital, what they've done with all the startup industry. We have had now 20 years of significant investment in infrastructure. Successive governments have done that. This government has even further accelerated it. Instead, let's be clear, the last 3 or 4 years, our economy has been supported by government spending on infrastructure. Private sector, small businesses got devastated through COVID and then the impact of war. So it's really the public investment in infrastructure that has helped us ride along, but that has a multiplier effect for the economy. More cement gets sold, more trucks get sold, more employment is generated. These all become consumers, they become investors, as Uday was saying. What is dramatically changing beyond some of these more traditional levers? One, the digital age. India now has a chance and is innovating for the world. We are no longer followers. We are not copying what was done in the West, because the West has been innovating for 100 years. Look at UPI. 12 to 14 billion transactions a month, about $230 to $240 billion of digital transactions a month. As I think Uday mentioned, that's more than China, that's more than the US, that's more than Europe, that's more than all three of them combined. This is our innovation. And not just because it's easy to make payments. Can you think of what is the underlying infrastructure at zero cost to the consumer to be able to build this? What is happening on the health side? Look at ONDC as a platform. I don't know how many of you have used ONDC, but everybody goes to Flipkart and Amazon. In the last year now, ONDC, I think, is doing over 50 to 75,000 transactions a day, zero cost to the merchants. If you're on one of the private platforms, of course they charge a fee, but this is zero cost. So what India has done and the Indian government has done is they've said that as an entity, just because you have some data of the customer, you cannot make money on that. We will create the right digital infrastructure which will be free to use. You build your models on that and make money. And that's a big difference. I mean, look at MasterCard and Visa. Credit to them that they innovated payments. But how many years ago that was? They're still charging 1.5%, 2%. With UPI, it's zero charge. Now, I'm not saying what is right or wrong. What I'm saying is that this is the change that is coming about over here, where India is starting to innovate. Look at climate change. I think again, government has taken this proactively rather than to say that the West ended up polluting for the last 50 years to develop themselves. And now they're telling us, please reduce your pollution levels without balancing the fact that you should be paying for our development today. But we are taking this up as a challenge because this is again an opportunity for innovation. The entire climate transition and moving towards a greener economy is going to is already creating new business opportunities, new opportunities for innovations. There's no reason for that to come from the West. It will come from wherever people, government and capital makes it happen. And India, once again, has that opportunity. So there are discontinuities right now due to the digital world, due to the greening of the world, due to the political situation. The fact that the world is saying that they want a great alternate source and is looking at India for that, for manufacturing, is a huge opportunity. You know, if that had not happened, our neighbor, who's multiple times are bigger than us and started this journey long time back, clearly has an edge. But geopolitics has also fallen in our favor. But in all this, we can't be sleeping. We can't take this for granted. Because just because the opportunity is there doesn't mean it's going to come to us. Smaller countries are already working much faster at trying to grab this opportunity. But the scale that we have is what sets us apart. And the confidence looking at how as a country we have performed the last 10, 15 years gives me the confidence that we have a great chance to make this work.
Thanks on that. Before I come to the audience, I could request you to start gathering your thoughts or questions, and for whoever would like to show the mic to them. Sanjiv, we have a population with a median age of 27. Possibly by 2047, we would have a median age of somewhere in the region of about 35, 36. China by that time would have a median age of 55. Japan would somewhere be near 60. Those are significantly older countries. Now, for this transit, for the youth of our country of 500 million people below the age of 18, like I said, median age 27, the opportunities of jobs in the formal sector will be difficult. We can't provide 20 million jobs a year. We don't have equal representation of women in the workforce. We don't have adequate representation of women in the workforce. And so when we assume 10 to 12 million jobs a year, which are come into the labor force, that excludes a lot of women in the calculation. What piece of advice would you have for these individuals entering the labor force? Is it more entrepreneurship? Is it more skill building and being appropriate for jobs? How would you guide them in terms of viewing the opportunities out there?
With the kind of numbers of new job requirements annually that you've talked about, Nikhil, you have to do each of these. And that is both a challenge, but also an opportunity. So on one side of that opportunities create more demand. This is very important. And that's why the government's focused on exports. That's where as an economy, as we are growing and the additional production, demand and jobs that we are creating can play a big role. We know the entire informal sector. Skilling is a very big problem over there. A lot of our youngsters that end up doing a basic BA, BCom or come out from an ITI are just don't have the right skills to get into a proper role. How can we as industry get together to skill them? And this is something that we have started doing across our group, where as part of our significant CSR focus, we are working on manufacturing and services skilling, both by creating our own program. So we have Bajaj Auto runs a big program that they've started last year. In financial services, we started about 3 or 4 years ago. But we are also working with other organizations that work on skilling to see how can we get people job ready. Because there's government that's doing its job in creating demand. There are businesses like us that are making the investment where you need good people to come and work. And then there is that last leg that is required, that how do you make people job ready? And that's very important.
Thank you.